Hey, Tom Hegna here. I get asked a lot, which life insurance policy is best? Should I write term insurance? Should I write whole life? Should I write IUL, variable life, universal life? Look, it really depends on what's best for the client and which one fits their needs best, okay? I'm not against any of those policies, but they are very different. Now, term insurance is fine when people are young, when they need it for a short period of time. It's like renting a house. It's not like owning a house. But you can't use term to leave a legacy to your children. You can't use term for most business insurance. You can't use term for estate planning. Term only pays if you die young, okay? It won't pay if you die old because it's actuarially set up to become too expensive that you're going to have to drop it before you die. So term is a short-term solution. For all the people who say you should only buy term, that's not true either, because I always say, here's the ultimate truth about life insurance. The only policy that matters is the one that's in force on the day that you die. It doesn't matter if it's term life, whole life, variable life, IUL, it doesn't matter. The only policy that matters is the one that's in force on the day that you die. Less than 2% of term policies are ever in force on the day that you die. Now, that doesn't mean term is bad, but it should be used for supplemental coverage, for extra coverage. When the kids are little, when the bills are high, when the paycheck is small, use some term insurance to supplement your permanent insurance, okay? But everybody should have a permanent policy. Now, whether that's whole life or universal life or variable life, it really depends on you and it really depends on the client. I personally like whole life insurance. It's been through all the economic cycles, interest rates up, interest rates down, markets up, markets down. It's proven itself as a wealth building tool. It is not a stock replacement, but it's a great bond substitute, okay? And it's a place where you can accumulate wealth over time. And for those people who don't believe it or they think term is better than that, just run them a 10-pay whole life. That's how I got in the business. Somebody showed me at the time a 5-pay whole life policy, and I'm looking and I say, okay, I pay this for 5 years. After this 5th year, I got all my money back, and the cash keeps growing, the death benefit keeps growing. I said, why would anybody buy term insurance? The guy said, I don't sell any term insurance. I said, do you get paid to sell this? He said, I get paid a lot to sell this. I said, I could sell this, and that's how I got in the business, okay? So I'm a big believer in using a 10-pay whole life or something like that. But IUL is the rage today, okay? And I get it. The caps are really high, 10, 11, 12, 13% on the upside. They normally have a 0, 1, 2% on the downside. So you're taking away the downside risk of the market. You're capturing much of the upside of the market. So, I like it. IUL is a beautiful product. The problem is that, there's a lot of things in that contract that are not guaranteed. The cost of insurance is not guaranteed. The caps are not guaranteed. And so they can play around with those things like they did with the old UL policies that were just fixed interest accounts. And when interest rates are paying 13 or 14%, they look like all the rage. The truth is, one of the best policies out there has been the variable life policy, because the markets have been going crazy. In a variable life policy, you can earn 20, 30, 40, 50, 60% if the market's going up. But then when the market goes down, those policies go down as well. And so the variable life is a little tougher in the drawdown stage, like if you're going to retire on it and take money out, because sequence of returns risk can kill you, okay? Some variable life policies allow you to have a fixed account that you can take money out of that, so you don't have the sequence of returns risk, but you got to be careful. With any universal life policy, number one most important thing, you want to overfund the policy. You want to put lots of cash in there, because the problem with universal life is that inside that policy, there's a term policy that keeps going up in price. And if there's not enough cash in that policy, the policy can blow up. And when it blows up, there's tremendous tax problems, because all those gains that they had in there become taxable immediately. So which policy is best? The one that protects their family, the one that's going to be in force on the day that they die. The universal life policy is a little more flexible. So like they can stop payments or lower payments or increase payments. Whole life is less flexible, but it's got more solid guarantees. Term is there to give you the most in coverage for the least amount of dollars initially, but term is very expensive over the long term. And the big fallacy with term is that, when I get to be wealthy, I won't need term insurance. The kids will be gone and I'll be rich and I won't need life insurance. That's the biggest lie of all, because you know who buys the biggest policies? Old rich people do. And so if you didn't need life insurance when you're wealthy and the kids are gone. Old rich people wouldn't buy any life insurance. They buy the most life insurance. So by taking permanent life insurance into retirement, you have some advantages. You can take tax-free income in retirement, or you can say the life insurance is going to go to the kids and we're going to spend all the rest of our money. That's what we've done. We bought life insurance to go to the kids for pennies on the dollar. We get to spend all of our money. Hey, that's my tip for today. Hope you have a great 2020, and I will see you soon.